Hello and happy new year. Hope everyone is doing fantastic. Hopefully, you have not kicked your New Year's resolutions out the door just yet, but wanted to come and bring you a quick market update. It's January 11th, the evening of, and wanted to talk about a few things. One, we need to talk about rates. Two, want to talk a little bit about those buyers that are out in the market right now. And three, of course, what seller's market we are still living in today. So, first and foremost, let's get into rates. We've been hearing and seeing and feeling rates increase slowly but surely over the last few months, a little ups, a little downs, a little ups, but more ups than downs. And so we are sitting at a little bit higher interest rate than we had been at 6 months ago, for sure. So what we've got is the Feds have announced that they are going to be doing some rate increases, and that Federal Reserve rate that banks rely on for overnight rates, and also banks lending to banks rely on, is going to be increasing. And as that begins to unfold and begins to happen, and the bond buying slows down from the Feds as well, that's going to naturally impact home loan rates, and we are going to start to see increases. And we've talked about that in previous market updates as well, but we will begin to feel that more than we have in the past. So that being said, in addition to the rate increases, there's also been an announcement from Fannie Mae that they are going to be doing some pricing adjustments specifically to two categories. One is going to be your secondary homes, and two is going to also be high balance loans. So if you do have a second home, now is definitely the time to consider refinancing, or if you're looking to do any kind of cash out on that particular property, now is also definitely the time to do it. Do not wait for these price adjustments to take effect. They're slated for April. You might see some lenders adopt this pricing a little bit sooner than that. So do not delay. Give us a call here, and we'll discuss if it makes sense for what you're looking to do. But you definitely do not want to wait till April. That's for sure. So the other one is going to be high balance loans. So what you've got is you've got a conforming loan amount, which is basically a very nice loan amount that the secondary market and investors like to buy, and those limits increased at the end of last year, and so most across the country are going to know that loan amount to be $647,200. Is kind of where you're at, but it is based on your county. So if you live in a county where homes are a higher price, you may have a higher amount than that 647,200. So it is county specific, but most people are going to find themselves in that 647,200 range. And if your loan amount goes over that, you're no longer conforming, and you might find yourself in a high balance loan. Well, some of those loan adjustments to the rate increases, which are going to be relatively significant and definitely felt in the monthly payment, will also be occurring. So it's going to be a strategy that you're going to want to consider when making a purchase. Of course, also stay in that conforming loan amount. But if you are looking to do anything with a secondary home, or if you are in a high balance loan right now, currently, it's now time to transact. So the cost of waiting will be very real if you do decide to postpone. So give us a call immediately on that. So we will begin to see rates increases. Ultimately, the message here, nothing new, but definitely something that you want to be aware of and keep in the back of your mind if you are looking to do anything related to secondary home, high balance loans, etc. So that being said, I want to talk a little bit about buyers. So buyers have if you haven't transacted already, you've probably felt the pain of a very competitive market, having to consider things like waiving your appraisal, shortening your contingencies to barely have time to do anything. Everything's a rush, rush, rush. Shortening your escrow periods, trying to get your loan done in record amounts of time, and it's been a very wild ride. And for those that have not transacted, you probably felt the frustration of writing offers, maybe not getting your offers accepted, whatever it might be. So it's easy to take your foot off the pedal and begin to slow down. Well, my encouragement to you would be don't slow down. So with rates on the up and continue to increase, it's I would say the cost of waiting is going to be very real for you as well. So stay active, stay motivated, don't give up. The right home will be available to you. For those of you that are looking to upgrade, you're kind of living in both worlds, a great seller's market, a great buyer's market. So definitely you have to have a strategy there. And so we can help you with that as well. So, but if you are a buyer, it is a great time to still buy. Rates are still fantastic, even if they are going up right now. But you do want to keep that foot down and on that gas pedal. So we've been experiencing a seller's market. So number three, we've been experiencing a seller market for some time. Everyone that's owned a home over the last 12 months has just loved the appreciation, the amount of equity that's been built in our homes. And now is a time where we see more equity in homes than we really ever have. And so it is a great time for that, and really why people say, hey, wealth is built in real estate. Well, look at the appreciation that we've all had and can enjoy in our assets as we continue to live in our homes, pay down our loans, those types of things. So that being said, we still are in a seller's market. Inventory is still low. If you are looking to sell, now is a great time to capitalize on that as well. If you're looking to do any kind of cash out refinance, or do some cash out for some remodeling or debt consolidation or anything of that sort, give us a call. In some cases, it may make sense still to do a to do a cash out refinance. And in other cases, if you're not looking for a large amount, it might make sense to just do a home equity line of credit. Happy to give you that advice. Happy to help you compare the two, understand the differences between the two. But we're here to help you make good financial decisions. So as you know, Bear Flag Realty and Company, we've got our Realty division full of great realtors. I also am transacting on the real estate side, and now we also have Bear Flag Home Loans. And our goal here is to not just be great at both of those, but we really want to be great at advising you. So when we've got the ability to understand both the loan component and we also understand the real estate transaction, it gives us the ability to serve our clients better. And just so you're aware, the residential purchase agreement here in the state of California just recently went from 10 pages to 16 pages. And so it's important that you're working with someone who understands the contract, that understands the agreements that are within it, that can help guide you through a transaction successfully, and to make sure that you're educated along the way and feel good about all those decisions you're making. A confident client is a client that we strive to have, and you can only be confident in what you're doing based on who you're working with and the advice that you're getting. At the end of the day, we want to help our clients make a sound financial decisions. So if you or somebody else that you know is in need of someone that's going to take good care of them, definitely give us a call here at Bear Flag, and we'll make sure we take good care of them. And obviously, we're going to take great care of you as well. So with that being said, I hope, like I said, all your New Year's have started off great, and look forward to hearing and talking to you all soon. Take care.